E12.15. Before preparing the financial statements for the current year, the chief accountant for Toso Shipping discovered the following errors in the accounts. Instructions: prepare the correcting entries at December 31st. Go ahead and make a table for this one. It will help you visualize it. So for number 1, let's see what it says. The declaration and payment of 50,000 cash dividend was recorded as a debit to interest expense of 50,000. So over here under my wrong entry column, I'm going to have interest expense, and that was 50,000. And what else did they do? They credited cash for 50,000. That is the wrong entry, right? This is what they did, and we have to fix it. What would the right entry be? Well, it is a declaration and payment of cash dividend. Since it is a payment, we definitely have cash that goes down, correct? And besides that, we're talking about cash dividend, which means that this is dividends payable, right? Before, it's basically like we said, we have these dividends that we have to pay in the future. So before, we increased our dividends payable amount. But now, since we are paying it, you see the cash is going down, we have to decrease this account. So over here, we would have dividends payable debited for the same amount. This would be the right entry, right? But how do we correct that? Well, one thing is for sure, the cash is not wrong, right? So we don't have to do anything about that because the cash is already right. What is wrong is this one over here, and we have to add this one. So if interest expense was debited and this is wrong, we have to reverse it, right? So we have to credit it. So we would have interest expense in the credit position for the same value. And this one has to be debited, but we didn't debit before. So let's debit now. Dividends payable, both for the same amount of 50,000. 2. A 10% share dividend, 1,000 shares, was declared on the 20 Taiwanese dollars par value shares when the market price per share was 38. The only entry made was, let's see, share dividends was debited for 20,000, and dividends payable was credited for 20,000 as well. We don't need that big of an entry. This is what they did, right? The shares have not been issued. Okay, so for this one, you have to remember the little thing that I showed you last time, this one over here, right? We are dealing with declaration of share dividends again. Here, we know that the rate is 10%, which means that this is a small dividend, which means that the right entry that we would have done would be this one over here. So we know for a fact that this is the entry that we have to make. So over here, let's just write all of that information first. On the debit side, we would have share dividends, right? This is a weird eye. Share dividends on the top. And on the bottom, on the credit side, we would have ordinary share dividends distributable. Don't write it like me, okay? It's because I don't have a lot of space here. And we would have share premium ordinary with the difference, remember? So, this is supposed to be a D. Okay, so now we can actually calculate the amounts to see if they match or not. Well, for the share dividends, that would be what? Remember that over here, if we're dealing with small dividends, which is our case, we would have the number of shares outstanding times the percentage times the market price or the fair value. So the number of shares outstanding, in theory, we would have to calculate using this formula. But here we don't have any other issuances or treasury shares should be deducted or added. So we can just use that 1,000 shares over here. So that would be the number of shares outstanding times the rate of 10 times, remember, if it is small, that is times the market price or the fair value. In our case, we see that the market price was 36 NT. And that gives us 3,600 on the debit side. For our ordinary share dividends distributable, the beginning is the same, right? It's always the number of shares outstanding times the rate times, in our case, the par value. And over here, they said that our par value is 20 NT. So let's calculate that. That gives us 2,000 on the credit side. And the share premium ordinary is always the difference between these two, which in our case will be 1,600. Okay, so we know that this is the right entry and this is the wrong entry that we did. Okay, so first things first, we don't have any kind of dividends payable, right? So since they were credited, let's debit it first in order to cancel it. So dividends payable, we credit at the same amount, 20,000. This is to cancel this one. So I'm going to go ahead and cross this one. Okay, what about the other ones? Well, we know for a fact that we need to have these two. So we can go ahead and copy them over here because they have to be credited no matter what. And the share premium ordinary. And the amounts are going to be the same as well. Okay, now the only thing that we are missing are the share dividends, right? Well, you know that this side we already have 20,000, right? If we were to put any value here, this would never equal to this side. So we are definitely putting that share dividend over here on the credit side. But another way for you to think about this, it's like, okay, so we debited 20,000, but we were supposed to only debit 3,600, so we have to credit the difference of this amount. So share dividends would be, you can either do 20,000 minus 3,600, and that will give you 16,400, or you can do these two together, and that will be 3,600, so it would still be 20,000 minus 600. Okay, and I just realized that I wrote this with a D, with a T over here. Okay, let's see number 3. A 4-for-1 share split involving the issue of 400,000 shares of 5 NT par value ordinary shares for 100 shares of 20 NT par value ordinary shares was recorded as a debited to retained earnings of 2 million NT and the credit to share capital ordinary of also 200 NT. Okay, a lot of numbers, a lot of information. Okay, so what did they do? They debited retained earnings 2 million and credited share capital ordinary 2 million. Okay, so let's write there here. Both 2 million. Now, what would the correct entry be? The answer is none. Why is that? Because this is a share split. Every time we make a share split, we actually don't make any kind of entry. So we would have no entry. What we do though is we would write a memo. I'm gonna show this to you a little bit later. But anyways, since this was the entry that we made and we were not supposed to make any entries, we can pretty much cancel the previous entry, right? And how do we cancel an entry? Well, we just reverse the positions. So we have retained earnings at the bottom and share capital ordinary at the top. And the value would be the same for both of them. Now, in this case, we didn't have to deal with the share split and all of that, but let's say that, for example, they didn't give us all of this information and we had to calculate it by ourselves. Well, what you would have wanted to do is to have a table that would look like this. And then here you could fill in the information. For example, 4, this is a 4-to-1 share split. And then you have the previous par value and the previous number of shares and before and after. So for example, in our case, these numbers are very confusing. The first time that I did it, I actually confused both of them. But the logic behind it is that why are we sharing? Why are we splitting that share? Because the value, the par value was too big. So it was hard to sell it to other people. So the previous number, the beginning number, it's always going to be the biggest one, the par value, because this is the reason why we're splitting it. And the number of shares is always going to be the smaller one, because these were the original number of shares. So over here, the original value of the par was 20 NT, and we had 1,000 shares, right? And in this case, they were very generous because they also gave us the other numbers. For example, it would become 400,000 and 5, right? So we would have written it here 5 and 400,000. But there will be cases that they won't be that generous, so you will have to calculate these by ourselves. Well, this is actually very easy. Let's call this x. This number, you're just going to divide the previous number by x. So 20 divided by 4, that's 5. And this one, you would multiply it by x. 100,000 times 4, that's also 400,000. And just one thing before we finish. Remember that I said that every time you split a share, you don't make any entries, right? But you would have to write a memo. This is what the memo would look like. Here, you would fill in with the information that you have. In our case, since this is a 4-to-1 share split, we would have 4-4-1 share split. Par value is decreased to 5. The number of shares outstanding, the new number, right, is 400,000.